Welcome back. Let's get cracking on the paint sector. Then we have AkzoNobel reported their numbers yesterday. 3.2% growth on the company's top line, but the EBITDA grew by 33% and the net profit grew by 44% as well. 3.2%, while relatively looks small, if you compare it with the likes of Asian Paints, Kansai and Berger, it's actually grown the second fastest in the industry itself. These are the makers of the Dulux paints. Rajiv Rajgopal, who's the managing director of the company, joins in now. Rajiv, thank you so much for joining in. You are a company who has, a little over a third of your revenues coming in from industrial. Decorative has been under a little bit of pressure in the second quarter. So could you first break up your revenue mix in decorative and industrial? And what was the growth in both of these verticals?
Yeah. So thank you, Mangalam, firstly, for having me on the show. And good morning to all the viewers. Typically, the coatings business accounts for approximately about 35 to 37%, as you rightly said. In the last quarter, it almost accounted for about 40% of the revenue, and that's primarily because the paints part of the business was muted. So paints was flat in terms of growth for two reasons. One, the erratic rainfall, and also, we saw in terms of consumer, a little discretionary spend getting postponed closer to the festive, which we've seen in October. We've seen a little bit of a higher blip during the month. Coatings, you've seen it, you cover it on the core sector index growth. I think the core sector index growth is reflective of the fact that particularly infrastructure and some of the large industries are doing well, and that's reflected in our growth. We've also seen a good uptick in the real estate, and as a result, Dulux, which is now getting to be the preferred brand by at least the marquee builders, clearly saw a bit of a rebound. So yes, in all the B2B business, in the projects in the paint side and all the coatings business, we saw faster growth.
All right. Hi, Rajiv. Good morning. Nigel on this side. What does it do to your market share? What's the last updated number that you have? And maybe by the end of this year, where you go?
So look, I think we break it by segments, otherwise it's very confusing, Nigel. And we are seeing an uptick. We are moving back towards, we had come to about 4.2% during COVID. We are moving back almost to 5. So we've seen an increase in market share, as you've seen now that you've reported the numbers of all the players. Though paints has been flat, we believe that we've gained still market share. And we've gained heavily in premium because our premium growth was almost mid-single digit. We had a bit of a challenge in the paints on the economy and the mass markets where you saw other players actually reporting a faster growth. That's something we've taken cognizance of. In coatings, I think we are growing very well in powder. We are growing very well in our automotive business and in our marine and protective. Industrial coatings has been a relatively softer, but there also we are now slowly seeing a bounce back. So all in all, I think overall, I think we would start now moving towards 8.5 to 9% at an aggregate level in terms of market share. We are, even if you look at last fiscal and even if you look at the first half, we are in the top 2 in terms of fastest growing players. So our purpose is really to start becoming a meaningful player in India in terms of profitable growth, and that's what we are sort of continuing to do.
All right, you are targeting 8.5 to 9% market share at an aggregate level from around 5% what you are at right now. We presume this would happen over the next couple of years. Just wanted to know, in the premium segment itself, where you saw 5% growth, your last known market share was close to around 16 to 17 odd percent. Where does it stand now? Because all the other paint companies saw their premium products not do as well as their mass products. In your case, it's the other way around. So have you gained market share in that segment?
Yes, so premium we are at about 17%, Mangalam, and we would be at now, we add about 0.1 because of the size of the market. Even when you grow faster, you add 0.1 or 0.2. Right, given our size. So I think we are moving, we've gained some market share in premium, but we've got lots to do. I mean, let's be honest, I think for me right now, the real trajectory is to see how much is the incremental growth we add every quarter.
Got it.
So that's the journey offset. And also on market share, just want to correct you. When you said, when we look at 8.5, I said that's the consolidated of paints and coatings. 5%, 4.5% I talked was only paints, which we moved to about 5%. Yeah, thank you.
Okay, all right, Rajiv, a couple of more questions then. Where does your marketing and ad spend move up to? You have been hinting that it is likely to move up. And where do margins stabilize? Closer to the mid-teens?
Yes, so on the margins, yes, we are pretty happy being a number 4 player in the Indian market to keep it around 12 to 13. I talked about it. And you'd see we'll be always in that zone. really we want to now invest on growth. On the ad spend, I'd said, we had dropped to about 1.5%, 2%. We are slowly taking it back to 3.5%, eventually to 5%. Now, if you look at the World Cup, I'm sure all of you are watching it, you would see a lot of Dulux spots, both on television, and even if you're on Hotstar, you would be seeing it. So we are completely invested, and that you will see in the next quarter results. We would see that the expenses on the advertising promotions will see a huge blip, because we are seriously interested in making sure that our brand and some of the campaigns that I talked about last time, like Dulux Assurance 2.0, some of our launches that we put in, like Weather Shield Protect Rainproof, which is the first of its kind in India. In India, the coastal side, Bombay, etc., experiences high rain. So I think we are launching products where the consumers will get a huge benefit when they apply on their boats.
All right, you spoke about Bombay, etc., and you spoke about the World Cup. The only two ads that we see on the World Cup screens are, one of them is Dulux, the other one is Rahul Dravid asking whether you think so much about your engine oils or not. But, I wanted your thoughts on the non-urban part of the market, which was relatively much lower in your overall scheme of things. How much does that go to in the medium to long term? Because you were looking to expand your portfolio in the mass segment. And secondly, the third quarter, which is the festive quarter, a lot is expected in this quarter. What are you seeing here? Can we see double-digit volume growth in the third quarter?
So first and foremost, even in the quarter gone by, our tier 1 and metro towns actually, was flattish. In fact, slight decline of about 1 to 2%. Our growth largely came in the tier 3, 4, 5. So we grew pretty high teen, single digit in the smaller towns, because we are, we've embarked on distribution 2.0. I see that continuing. My intent and our team's intent is to try and put it closer to double digit in the smaller towns, etc., in towns where our access is low and we've got a lot of investments to do on the brand and distribution side, right? How do I see it pan? I think eventually, of course, metros will bounce back in this quarter. This quarter, will it be double digit? It's too early to say, Mangalam, because, we've seen a soft quarter. Yes, the initial month has been very buoyant, but again, for me to predict and expect, intent is to get to double-digit growth. But let's see how November, how the festive is. Let's see how the week post Diwali, where the country takes a bit of a break on a holiday, etc., how the rebounds happens. I do expect it to be high single-digit to early double-digit growth.
All right, Rajiv. Thank you so much for joining in. Wish you, your team, and all your chain happy festival season, and happy festivities to all of you as well. With that, wish you good luck for the third quarter and the fourth quarter, and take a break on the show. Come back on the other side. We talk about the markets and a lot of stocks in focus.